Is it on? Sorry. Good morning, everyone. I'd love to introduce our panel today. We've got, to my left, James Hocking from Lighthouse Infrastructure. And then following along, we have Davin Berlowitz from Tech C Investments. And then next to him is Chris Toomey from Arena. And Philip Mack is on the end, and he's Global Head of Resources, Energy in Northern Australia at the National Australia Bank. So one of the big topics that has been discussed at the conference, and there's a wonderful energy here in the room, and I've been really impressed with the calibre of the speakers in the past 2 days, is finance. How do we get these projects over the line in terms of finance? And can we unpick some of the strategies behind that? And I'd like to kick off with Philip, if that's all right, on that topic.
Hello. Hi. So my name is Philip Mack. I obviously look after the Resources, Energy and Northern Australia project finance business at National Australia Bank. And I think when we think about finance for these type of projects, and why I thought it was quite interesting to come to this conference, I think is really that in terms of financing mines, project finance basis, we're a large lender in that, and project finance is a very well established funding source for mines. And then I think in the last 5 to 10 years, what we've seen is renewables go from something when I started my work and career at National Australia Bank being very niche. People found it hard to deal to, and lending towards renewables was very difficult versus trying to lend towards coal-fired generators or gas-fired generators. But move forward to today, and I think actually when you're working at a bank and you're evaluating power projects, and probably when you're evaluating mines, what we're finding is that cost of capital and debt towards renewable power projects now is probably lower than what we see for traditional fossil fuel generators, given where the regulatory risk sits for fossil fuel generators and carbon emission type footprints that those things have. So I think certainly from a financing sector, there's a big pool of capital looking to be deployed into renewables. And looking at Will's presentation in day one, I mean, really it's an eye-opening experience to say, well, how big is that opportunity for financiers? Because they are looking for ways to deploy capital into the renewable markets. Renewables is becoming very cost-effective. From a bank point of view, I work in the power space, obviously. We see that technology is very, very common. It's normal. Like, we don't have any odd characteristics of how we fund it. It's very mainstream, but what we haven't really done right now is obviously look at the hybridisation, and that's something that we have to look at.
And just before you go on, obviously you're talking to a person who was a financial reporter for decades, so I'd be trying to just focus you a little bit more on the specifics. And I know NAB recently funded the $750 million Colgar wind farm in Merredin. It's believed to be the state's largest ever project. Can you just talk me through any specifics about any projects in this space that you are working on? Because I know the audience would be fascinated to know about those.
Colgar was done a little while ago, but obviously still probably is the state's largest wind farm. Certainly I think at that stage we have all talked a lot about PPAs and the importance of those things. And certainly the PPA, if I recall when we were looking at that deal, was one of the key sort of elements in trying to get that project up and going here in Western Australia. And I think when we sort of relate it back to mines and other things, I think the way we look at risk allocation between either the thermal power plant or the renewable power plant, I think what is clear to us, obviously, a single point of responsibility would seem to be the right way to go. I mean, we do have to get to that point where power is provided. If it's hybridised, it's hybridised, it goes through one point of sale. And then the risk allocation that you want to present for the project in this PPA or whatever agreement you want to put there to do that is key. And we need to be able to structure that, work with miners and other people to try to arrange those type of things. And I know in that project, that probably delayed the project nearly a year, trying to allocate the risk correctly between financiers, the project, and obviously the ultimate off-taker.
And if we could just move to Chris. realistically, we've heard that much of the investment with regards to solar and wind farms in Australia has been coming from global multinationals. Are they the only ones with deep pockets? And there's been some discussion, I know, today and yesterday, but also in the past couple of months in terms of the Australian press, that the smaller projects are finding it extremely tough to get funding. Is that the case? And can you explain to us exactly why that is, and perhaps take us through why ARENA is so important in this space?
Sure. So I think from our perspective, whilst you are seeing a lot of the capital coming from the large multinationals, you're not seeing it's the multinationals building the projects. So in the recent large-scale solar round that we just launched, you actually had quite a large Australian EPC contractors such as RCR, such as UGL, all stepping in there to actually go and build those projects. Those guys are hiring local contractors. They're using local equipment where possible. You do have local banks coming in and financing these projects. So whilst I suppose they do have the balance sheets to go and support and make the bankers happy, we are seeing a lot of local content and a lot of local technology developers actually being part of those projects. So whilst you might see the major international guys getting the headlines, behind the scenes there are still a lot of local content going into these projects. The other thing that we have noticed is it's a maturing market. So whilst in the past you have seen some of the major internationals doing end-to-end on some of these projects, you are seeing a mature market where you are getting a lot more niche players. And those niche players tend to be local players that are looking to get in and provide their particular part of that particular solution, that particular part of the supply chain. From ARENA's perspective, we're supportive of everything to do with renewable energy. We fund everything renewable energy that is pre-commercial. So the way we work at ARENA is we see ourselves as a lender of last resort. When anybody approaches us for a project, the first question we ask them is which banks have you spoken to, which equity providers have you spoken to, and convince us there's a reason why you need a grant. The way ARENA works, there's three questions we ask on any project. One, is it novel? Is it innovative? Two, is there a path to commercialisation? And three, will it actually drive an uptake of renewable energy in Australia? So those are the three questions we ask on any project. Now, don't necessarily has to be a positive answer on every single one, but that's the way we approach things. We want to drive the industry along. We want to get more projects built in Australia. We want to see the renewable energy uptake in Australia, and we do whatever we can to make that happen. But we have a saying internally, the best project for ARENA is a project we don't need to fund.
So I believe that that ARENA recently allocated $5.5 million to the Emu Downs solar farm near Cervantes. Is there anything else that you're working on right now that we can speak about at the conference, particularly in Western Australia?
Western Australia in particular, we are open for business. So we have an open program. We launched back in May our 4 new investment priorities, which I believe my CEO Ivor spoke about yesterday. So the first one of those is secure and reliable grids. Now, the driver behind that is as you get higher penetration in the renewable energy sector or in the electricity sector, particularly on the East Coast, you need that balancing technologies, you need the CSTs, you need the batteries, you need the pumped hydro, you need the bioenergies, you need the hydrogens. So ARENA's focus in that area is really about how do we get a stable grid such that that can actually support a further uptake of renewables. So we're really focusing on the enabling technologies there. Also, obviously the renewables, so CST is still a renewable technology, bioenergy is still a renewable technology, batteries on their own aren't, pumped hydro on their own aren't, hydrogen on their own, unless obviously the electricity is coming from renewable sources. So that's one of our big focus areas, and that will be, we've launched a couple of various different programs under that. So in demand response, we've gone out with a tender in conjunction with AEMO and 3 of the states to ask for bids around demand response. We've recently gone out with an RFI around solar thermal. So we really want to see solar thermal having a place in the Australian energy mix. But it is challenging, and we do want to see projects up and running, but we're still a bit of a learning process on that. A few of the states are running their own battery programs, which whether we will support them or not, we will work with them where required. And then we have our general open program. So that's sort of our number one priority at the moment. We're also focusing on solar PV R&D, less relevant to this crowd here. But really that's about how we get more advances in solar PV. Our third one, which is probably more relevant to this crowd, is energy productivity. Now, energy productivity is a pretty broad sector. We are expecting that our mandate will be expanded to do pure energy efficiency. At the moment, energy productivity to us still needs to include some level of renewable energy component. But what that means is that the off-grid sector, the mining sector, the industrial processes sector is a big focus area of ours. We will continue to do projects. We will continue to push the envelope. We want to look for innovation. So we want to look for innovation which allows renewable energy to have a place within off-grid mines, within industrial processing facilities, in the longer term, and then hopefully once our mandate is expanded to do energy efficiency, really looking at new energy efficiency technologies, what those technologies can do. So for us, big part of what we want to do in the future. And then the last one, which is, I suppose, a bit more longer term exciting, is exportable renewables. So very much looking at Australia as an exporter of energy. And that can mean a whole lot of different things. Hydrogen's going to probably be the main driver behind our effort in that space. From ARENA's perspective, we have another 5 years left of our mandate. We want to push that industry along. We're not looking to make changes overnight. So we will do a lot of R&D, support technology developers in bringing down the cost of hydrogen, for example. And we are supporting some companies that hopefully we'll get some announcements soon on that. So those are the areas that ARENA's focusing on at the moment. But I mean, we're open for business. We want to support projects. We want to see technology advancements. We want to see more projects on the ground, and where there's support needed for us to make that happen, whether it's commercial drivers, whether it's technology drivers, whether it's new innovation that mines or industrial customers want to provide. That's
and just on that innovation perspective, I know Davin has been working in this field for many years, and has been responsible for a great deal of innovation in terms of financing with this sector, or his company has. Could you just explain to the audience how your company really has been operating with a flexible approach for some time?
Kate, thanks. As Kate mentioned, my name is Davin Relevance. Texi Investments finances, designs and constructs renewable projects specifically in the mining space and on a turnkey basis. I personally am not from a banking background. My background is EPC, having successfully sold 2 large EPC businesses. So for the purposes of this discussion, I hope to offer a slightly different angle. Texi Investments now not only designs and constructs, but it seeks to finance renewable projects, specifically for remote mines. And I think the innovation that we see in the space is that by doing the finance and design and construct for these smaller projects in the $2 to $30 million range, we do that finance, design and construct all in-house. So we have a finance arm where my partner Mark Schneider is previously head of renewables for Investec Bank, and we'll raise that finance in-house and do a lot of the commercials in-house. From our background, we'll do the design and construct in-house, and I think the issue around remote mines, because these projects are a lot smaller in value, in the $2 to $30 million range, is that they can't support the costs of using large banks, and they can't support the costs of using large EPCs, because from a design and construct perspective, there definitely is a space for large EPCs. I'm not saying there isn't, but large EPCs, as Chris mentioned, use a lot of subcontractors. They have very strong systems to control those subcontractors, but by the time the capital cost gets to the project, there's between 30 and 50% added onto the project value. And obviously you're borrowing a lot of money right at the beginning of the project and trying to pay it back over a 5 or 20-year period, and this really impacts the investor rate of returns on this project, and so too with the finance. So we believe with this model, and both coming from a utility background, myself, my previous company built over 20 large-scale utility wind farms here in Australia. We built the first one in 1998, Crookwell Wind Farm. We believe that we can really make this market in this remote mining space commercially work. And although ARENA does a really good job, and we're very excited that ARENA wants to fund these projects and get this remote mining off the ground, just as it's done in the utility space, we believe the market has to find its own balance, become cost effective, and that will bring a lot more developers and a lot more contractors and a lot more willingness from the mines to actually work with these projects. If it keeps needing external funding, like LGCs and grants, the industry will never get off the ground. And that's what ARENA did so well in the utility space. I remember quoting the very first solar farm here in Australia, just outside Canberra. And I looked at this and I saw it's a 20 megawatt solar farm, and they were putting in hundreds of thousands of panels. And I was thinking, how can this work in Australia, where labour is between $60 and $100 an hour, and I want to put in hundreds of thousands of panels, and there's coal-fired power stations and all these other things? It's just commercially unviable. Anyway, that solar farm did go ahead, and today, 5 years later, we sit here, and these solar farms can sell electricity to the likes of AGL and Origin at $70 a megawatt hour, and still make these projects commercially viable. And that's what I believe will happen in this remote utility space for hybrid energy storage systems.
Thank you. And just moving on to James, as we were talking earlier, and James comes from an equity perspective, and he's seeing some interest in this space in Australia from European investors. Is that correct?
Yeah, I think that's right. I think it ties in well with what's been discussed so far, which is there is a lot of interest from overseas investors and overseas developers, and we've certainly seen a lot of them as active participants in the market so far. I think it's good to note at this point, I mean, I'm with Lighthouse Infrastructure, and we're a specialist funds management business, and we have a specialist solar investment fund. So, and the investors in that fund are entirely Australian investors, predominantly of an institutional background. So we are definitely seeing the Australian investors coming to that space as well, and I think they're very keen to invest in that market, provided that you can, as Phil was pointing out, get the risk allocation right, and probably that's where the mutual benefit exists for infrastructure investors, both debt and equity providers, and people from the mining community, is that if you can allocate the risks correctly to those parties who are best placed to manage those risks, you can get a mutual benefit in that the investors in the project can bring the lower cost return requirement to the investment from an off-balance sheet perspective, and the miners can benefit from a lower cost of electricity. So, the international investors are certainly there, and the international developers are certainly there. There's a lot of projects currently being developed in Australia, and our most recent acquisition has been alongside the Dutch Infrastructure Fund, who we are 50% holders with now in the Clare Solar Farm in Queensland, which has been partly financed by Phil and his colleagues at NAB as well. And we're very proud of the fact that that'll be, when it's completed, for a period of time at least, the largest solar farm in Australia. So I think local equity is certainly there, and keen to invest, but as are the international investors as well.
So we're just going to have a couple more questions with the panel, and then we'll throw it out to the floor. One of the things I'd like to, anyone feel free to jump in, but maybe Philip, what is making proposals attractive to financiers? So when they come through the door with their project and their idea, what is getting them over the line in terms of some specifics again? What are you looking for?
Probably what I can say is green is the new black in banking and finance. I think everyone used to want to do fossils and thermals, but you can't talk about that anymore. So all we talk about is renewables and clean energy. So really there is that, if you're coming to banks and equity and the like, they all want to allocate capital into that asset class. So there's a really big opportunity, I guess, in the mining sector to try to lower that capital cost base, I guess, as James sort of outlined. Because we are seeing very low rates of interest or rates of return required when it's investing into this sector. And there is that, I think, future opportunity for miners to tap into that lower form of capital because, at the utility scale, there's a large amount of deployment that's happening. I think, CEC mentioned there's something like $7 billion of renewable projects being developed or being constructed now. And I think as National Australia Bank, we see probably 5 gigawatts of projects out there, vying for finance, trying to get done in this market. In the thermal space, no one's competing anywhere. I think the last thermal deal I did was maybe 3 or 4 years ago, a gas-fired power generator. So here, the attraction is this asset class is a very attractive asset class. You can attract very low forms of capital. And as we all know, renewables is very capital intensive up front and cost of capital is a key driver.
Okay, would anyone else like to comment on what's getting over the line? What's the difference between maybe an unprofessional approach and some companies might need to be able to learn from other companies? Have we got any insight here, Chris, on that subject, or James?
Yeah. The thing I'd add to those comments, Phil, and certainly I think they're all very accurate, is the quality of counterparties that you're dealing with. So for us to make an investment, I mean, we certainly get a lot of people showing up and asking us if we'd like to make an investment with them, and they sort of come to our offices and we have a conversation, and it turns out they've got a right to, or an option to lease a paddock somewhere in the middle of nowhere, and they sort of say to us, would you like to invest in our solar farm? And that's great, and we appreciate the enthusiasm that they have there, but really that's not where you get the benefit of institutional capital coming in. I mean, you need to, those project developers rightly take a higher rate of return because they take a higher risk, but really to get the institutional capital in, and I think to get the banks more comfortable as well, you need to have a quality set of counterparties. You need to have the risks appropriately allocated to the best parties to manage those risks amongst the counterparties, and it really needs to be sort of ready for investment at that point in time, sort of shovel ready as we term it.
Would anyone else like to comment on that issue, or?
I think from our perspective, the thing that we hear when we're talking out to the industry is the internal stakeholders within organisations. So, I mean, guys in the room, no new news to them in terms of some of the organisations they work in are not necessarily quick moving, and a lot of these things take time. The gestation period on renewable projects or hybrid projects or any new capital is long. So bringing the people internally along for the ride, ensuring that stakeholder management is worked through internally is actually pretty important, because whilst it might be the best project, that there is one person that's driving it along, you always need a champion, but you always need to have everybody else along for the ride as well.
Right, and we've just got time to talk about one of the most interesting aspects of this space, in my view, and that is government policy. And I know some of the members in the panel will be handballing that question. But I thought that Davin might have some views on government policy and this sector. Are we going to... maybe we could do it more generally and say, what are the financiers looking for in terms of proactive, long-term government policy on this area? Would anyone like to talk about that?
Well, I think Kate chatted to me about it a little bit earlier, and without causing, I guess, too much of a furore, is especially in off-grid generation, the generous fuel rebates that remote sites attract obviously perhaps has a slightly negative impact on the financial viability of remote projects. And I think that's the only thing I can really come up with in regards to government policy and regulation. But I'm still a firm believer that even though those rebates are there, for example, we've just put in a competitive tender for the South Australian government where there are fuel rebates, and we were given the task of beating their cost per megawatt hour for generating electricity for an off-grid town. We were able to do that or get pretty close with a completely new capital investment and a project with a 15-year life and 70% renewable penetration, including the fuel rebate that the government does get. So I don't think it's the only thing stopping these projects, but I do think it perhaps contributes in a small way.
Okay, well, I think unless the panel has any views that they would really like to share before we move on, anything really interesting you'd like to talk about before we throw the session open to the floor? Is there anyone that would like to say anything? Yep.
I just think one thing, just hearing everyone talking, I think there needs to be a distinction between these large utility scale projects and funding of them. I think it's become a more mature market. I think investors are comfortable with a single-digit rate of returns. In this hybrid solutions and remote energy space where a particular mine or a particular town is 100% dependent on the power source, it's a very different story. The risk is so much higher. Where if you're putting a 100 megawatt solar farm onto the grid, and that solar farm falls over, sure, it could have its impacts, but it's not as though an entire town or city will lose its power. So I think that's where the risk comes in with investors in these off-grid things where an entire mine or remote community can lose everything, and that's why they need higher IRRs, and they also, in our view, and what we've been seeing is private equity could fill that gap, who can take on a little bit more risk with the equity, and we have funding partners who are keen to take on that risk as long as they can get a slightly better IRR, but not a ridiculous IRR.
Yeah, I would just echo that. I mean, obviously we see a lot of projects coming across our desk, and we're not naive in terms of the challenges that still exist in this sector. I mean, ARENA's invested quite a significant amount of capital to date in both the off-grid, fringe-grid community and industrial sector, and we want to see the sector moving on its own, but there are still challenges that exist. And part of our investment rationale is knowledge sharing, and I know it's been talked about and people have seen our document out here on our off-grid handbook, and that for us as ARENA is a way of actually giving a bit of a return on our investment. So the money that we've spent to date in terms of saying, look, we want to give something back, we want to help de-risk some of these projects. We want to bring people out to the sites that we have funded. So it was a great event out on Tuesday where we had 64 people join us out at the DeGrussa Solar Farm. To us, that's what we're here to do. And we hope that de-risks projects. We hope that allows people to start asking questions and getting answers. It moves the conversation along. It's not the be-all and end-all and the ultimate answer. But yeah, we agree. There's still risk. This is not the utility space. There's still things that need to be dealt with. There's still integration is still challenging. But part of our role is to continue to work with miners, work with developers in terms of trying to deal with those risks. And whether that's ARENA stepping in and providing funding, or whether that's ARENA sitting down and providing knowledge, either way, we're there to give that back.
And it's a definite shift in the way the whole resources sector is operating in terms of a more collaborative style. both in the technology and the financing of this area. Is that everyone's experience in the panel? This more collaborative approach to industry is in your sector as well?
Yeah, I think from our side, we're busy working with Amine and one or two large industrial plants on a collaborative basis, where they're saying, look, we want to investigate solar, but we don't want to incur the cost right now. But if you can help make it stack up for us, then we're prepared to look at it, and we're prepared to even provide the capital. So we have to give them the processing plant the option of either investing their own capital and us just being an EPC, or us being an RPP from the other side. But the idea is to and I think they said it very clearly. I think Katie said it very clearly in the panel discussion yesterday, that it needs to be collaborative, and you need to continue working with the miner and help them along on this journey. And that's what we're doing with the processing plant. We're helping the guys along on the journey, and in the hope that we'll get to either design and build the project or become the RPP for the project. So it is a bit of a long haul, but if you're in business, you need to be in for the long haul. And I think the discussions in the room today and yesterday, that I think things are nearing a tipping point. I think we're nearly at the top of this crest for things to tip over, and hopefully with the help of ARENA and more people coming into the market, hopefully it's a year or two away.
And just before we do throw it open to the floor, in terms of it moving to a tipping point, Philip, does that mean that more people will hopefully come to you with more standardised requests for funding, that you'll be able to tick the box more easily?
Yeah, I think the industrialisation of funding, or more standardised approaches, obviously drive down cost of funding and availability of capital. But through any innovative journey, I think you have to start from more bespoke, and I think Enel was talking about bespoke solutions for mines, and I think that is correct. But the banks are here. We have the skill sets to look at mine risk, the risk on the technology, construction, and this collaboration in the front end to drive that innovation and change sort of has to occur through, I guess, the people who want to lead that change to put those projects together. But the banks have the capability. I think the equity has the will to want to do that as well, and obviously the EPC guys have got different technologies which people want to work through. And as I said, the costs are becoming more and more compelling. The environmental aspects are more and more compelling. And so, if we keep going down that journey, it will get easier and easier and easier, just like the renewable journey in the utility scale. Whereas in the beginning it was very difficult, whereas now you see a lot of projects come through our door, and the way we fund it, the way we look at risk, is pretty well defined. People know sort of the box they need to go through to try to get projects off the ground and funded through banks or through equity. And I think the same can happen in the mining sector. It happened 20 years ago when I funded a whole bunch of thermal power assets for BHP off balance sheet. It happened then. The same thing can happen with the renewable or the hybridised sort of portfolio as well.
And I'm conscious that James hasn't had much of a go. Have we interrupted you, James?
Well, I think the thing I'd add to that, both Chris and Phil's comments just now, is, as Phil pointed out before, it's an immensely popular sector at the minute. I think a lot of people would really like to see investments in the space get away and for lots more developments to go forward. So particularly in Australia, where I think we have been probably behind the rest of the world and particularly Europe at this stage in terms of our renewable energy space. I think ARENA's role in facilitating that learning, facilitating the knowledge sharing amongst parties, getting people comfortable with what the risks of a project are, and even just getting people familiar with the fact that they exist and they can be done, and a proof of concept is out there, and that there is significant opportunity to develop those projects in Australia has been fantastic. So I think There are plenty of learnings that have been had. There are probably a few more to come, but certainly the space itself is increasingly popular from all sides of the table, basically.
Right, thank you so much. That was fantastic discussion. We'd like to throw it open to the floor. Who would like to go first? This gentleman here. Thank you, Adrian.
Gentlemen, thank you. Wayne Trumbull. I'm an old retired guy. Particularly interested in the Emu Downs investment that you've just made, Chris. While $5.5 million is a relatively modest amount of taxpayers' money, APA obviously didn't need it. Emu Downs has been around for a long time. What was the particularly innovative item that attracted the taxpayer funding to that project?
Sure, thanks for the question. So the Emu Downs project was funded through a competitive process. So we launched back around 2 years ago a large-scale solar PV competitive round where we went out for tenders for large-scale, utility-scale solar PV plants on the NEM and the Swiss. We, at the time, didn't know what we were going to get. We saw a price point in the market for large utility-scale PV. We saw that price point was significantly higher than what we were seeing in the rest of the world, and we wanted to see, as a bit of a price discovery approach, what exactly does it cost to build a utility-scale PV plant in Australia. So ARENA put up $100 million. Our cousins at the CFC put forward a debt package of $250 million. And what that did is that pulled the industry forward. Now, we expected out of that we would get 200 megawatts worth of large-scale developments from our $100 million and about 4 to 5 projects. We ended up with 12, cost us $88 million, and we got 490. It was an open competitive process. It was done on, I'm not going to go into details around the merit criteria when we assessed each project, but effectively they were competitive compared to the other projects out there. Now, on the back of that, we've now had 6 or 7 projects at the utility solar PV scale that have gone out without ARENA funding. So we feel our job's done. We ran a competitive process. Emu Downs was successful in that process, and what it's done has seeded an industry that no longer requires our support. So in terms of innovation, one of the things we did as part of that round wasn't looking specific for innovation. We were looking for the commercialisation of solar PV, and we think we achieved it. Well, we did achieve it.
Right, have we got some more questions? We've got the bank.
Yeah, we'll just keep the questions over here. UPFAS, GHD, quick question for Phil. You say that ticking the boxes for solar PV farms is going a lot easier now, and you went through some consultation. And how's that going for solar PV plus energy storage? How are you on the comfort levels with adding energy storage to large-scale solar farms? And maybe even can you comment on what you think the future of standalone energy storage or large-scale energy storage is on the NEM, given Finkel's review? Yeah.
Look, in terms of energy storage, I think we're at the beginning of the journey, I think, for us. So we haven't, from a commercial bank point of view, seen projects where the solar and battery storage, I guess, are key drivers to the bankability or economics of a project yet. Absolutely, we're very interested in seeing that, and obviously in other jurisdictions we are seeing battery being integrated at grid level or within projects, and various mechanisms which are around to support I guess that type of involvement. But specifically right now we're open towards it. National Australia Bank has a unique advantage. We have invested in in-house engineering, renewable energy capability to assess different technologies as they adapt and evolve. So we definitely would be interested in assessing that type of project, but what we just need to see are those projects come through. And obviously, I think through the ARENA program and other things, we are seeing solar projects having hybridisation. ARENA's taking some of those risks on board, and I think what we just need to do is see the data. How do they perform? Because we've obviously financed gas peakers and other things, and we can see what the risk factors are in terms of performance characteristics. And that's what we want to learn. We want to learn, do they perform the way that we expect or is warranted? because obviously as you play more load shifting or frequency support and other services, peaking services, performance characteristics of that equipment is pretty key to us and the economics of a particular project.
Yeah, I think the thing I'd add to that, Phil, is I think increasingly we're seeing projects that are already considering the option to add on batteries. People are planning ahead for the ability to include battery storage alongside their renewable energy plants. Certainly, I think that the role of batteries is going to be much larger going forward, or energy storage in general, particularly, as you said, in light of the Finkel review. And it's really a question of just how does that get facilitated? Because I think there's no doubt that there is value to be offered from storage solutions, particularly in combination with renewable energy. So how can we achieve that? And how is it basically priced in to the benefit of investors, or how can investors get comfortable with the risks of those tack-ons or additions to the project, and what does it add from their perspective? And in terms of how it does get facilitated, I think there probably is a very important role for ARENA to play, much like Chris has just described in terms of the solar PV.